Okay, what up, y'all? It's been a little bit, but it's your boy Kamal Hart back on the charts, and we're gonna go bar by bar. So, truth be told, I've had a little bit of a challenging time making these videos because I've been experimenting with new strategies, and I wanted to solidify some of my concepts before I hop on a video and say, this works or this doesn't work. Um, So that's part of the reason why I've been absent on the videos. And even now, I'm deciding if I should do a traditional kind of video the way we normally analyze price action, or I should start to show y'all some of the new concepts I've been implying in my personal trading. I think I'll start off by saying that nothing is 100% in trading. So even when you find your new holy grail, um, that doesn't mean you're going to win every trade forever. You'll still make dumb mistakes. Uh, Hopefully, you're at a point where you're not making too many like mechanical errors, moving your stop loss, not having your targets in the right place, things like that. Hopefully, that type of stuff you can correct. But every now and then, you're going to think something is a trade that isn't. You're going to misread the price action. And, that's just part of the game. I think what really takes traders over the edge and into the next level is that they learn how to limit their losing days, right? So if I pull up and I lose, three trades in a row, I'm done for the day. I don't need to make it all back today, right? I think things like that are truly the real difference between quote unquote making it and not. And it's less about what specific strategy you use to analyze the price action. So I hope that makes sense. I always want to provide value because if I just do it the way I always do it, you could just look at the other videos, honestly. Some days it's going to work better than other days, but that's just the game. So, what I will do is show y'all kind of this new technique, and hopefully, y'all gain some value seeing kind of a different way to look at the markets. Um, so, essentially, this technique is based off of Wyckoff. Um, it's generally, in my experience, it's been really a great way to analyze the market when it's ranging and a way to sort of identify the uptrends, the consolidation period, and whether it's going to continue in an uptrend or reverse and go into a downtrend, which in reality, Mac talks about that in his own system as well, right? He says there's a trend, a break outside, we move to a new high, usually an hour of consolidation, and then the trend will either continue or it will reverse. So Wyckoff is the same thing, but the focus is a lot more on that market cycle in deciding your trades. And they don't specifically bring up second entries and things like that. But I still use second entries, but I like to use that Wyckoff structure. And then when I see the structure, I'll take the second entries within that structure. So, for instance, if we're looking at the pre-market, we'll get our day started just before 6. We can see that in the overnight, there was a downtrend, some consolidation, a false breakout, a continuation of this downtrend, consolidation, a false breakout. I don't really see this as a continuation of the downtrend. I just kind of really see that as like another sort of false breakout. But either way, it's just kind of chopping around. This whole area in general, I think you can just consider it a range. So what we want to do is we're going to take a horizontal line and we're going to look for the area where we get the most touches. It's really the same thing in terms of line placement for the range. It's like you use max strategy, but we're really, really keying in on the ranges. And I think that's kind of important with Mac strategy because when the market is trending, I think the way Mac, or let's not put it all on Mac, price action system, the way the price action system works, I think it's great for when it's trending. But when the market is ranging, it's pretty easy to get chopped up, and it does get a little tricky on when you should or shouldn't take your trade. So I like using this method because the market spends most of the time consolidating. I read it somewhere. Is it like 75% of the time the market is consolidating, and then that 25% of the time it's trending? So it does kind of do you a service to sort of key in on these consolidation areas and really understand the structure and how to trade them accurately. So that's pretty much what we're doing right now, right? We're just identifying our key levels. These are the levels where price seems to pivot, reverse, bounce, all that type of stuff, right? So we have our lows down there. Um, Even up here, you're gonna have to do your own reading when it comes to Wyckoff, but there's a concept of when we're trending up, this bear move is the first sign of people covering their profits. It's the first sign of sellers showing up. So like right there, we'd want to kind of create our support or supply zone, right? So right there, we start to see that okay, the demand isn't as high, and there's a little bit of supply. That's why the price went down. But generally, what will happen, and this is perfectly in line with Mac. You just have to know the different vocabulary, right? If we really look at it, we have a trend, a break outside, and a move to a new high. Wyckoff has a similar concept where after this first sell-off, price is going to test these highs again to really make sure that the demand is gone. If the demand is truly gone, it's going to sell off again, right? So what we'll do here is place our highs up here. And then you can already see the range behavior. We have a range, breakout, fails, breakout, it's pushing back into the range. These are all, if you just switch the vocabulary around, it's really the same thing. Uh, but trading this way, like I said, we're just focusing on the ranging market and the transition from the range to the next trend. And really, if I can get this right, after a downtrend, so it would be called a markdown. This is an accumulation zone, right? Uh, the smart traders are buying their position at low prices in order to hopefully see the markup phase, and that's the uptrend. And then after the markup phase is complete, there's a distribution phase, and that's where people are taking profits. Short sellers are starting to get engaged in the market because they think the market's overbought, things like that, right? So we go from accumulation to markup to distribution to markdown, and that process just continues in different ways. Now, every now and then, of course, you're going to have a markup, distribution, and then a continuation of the markup. Generally, that's a break in the pattern, um, but it still works the same. And in those cases, we'll still use like our breakout pullback rules and things like that. So, there's a lot going on, and that's why I think this video is important because lately I feel like if you just draw your lines and look for your trends, the trades are there. But the reason that I even moved to this sort of strategy is because I had to do so much thinking. It's like, oh, is it this second entry or this second entry? Is it this lower high or this lower high? Is it this or me? And I wanted to just simplify my process. So a good way to simplify that process is to just look for your horizontal support and resistance, supply and demand zones. When you see price get to these levels, take the same trades that Mac would say to take. Second entries, nice signal bars, Usually you want to take them above the EMA, but even the signal bars, trading like this, sometimes you don't have to worry even about the signal bars. And we'll see some examples of that. But that's just the gist of where I've been mentally with my personal trading. And it's been working pretty well for me, especially in certain market conditions. So let's kind of jump in and get it started. We're looking at um, a push lower and we're working back into this range. So really, I mean, we just want to take like second entries uh, on either side of this range. It's pretty much that simple. So that's the first entry. We're going to go ahead and skip that. Um, you know how this is like a bull bar, but it has a bearish tone. So like some people might take a short below this. I'm just gonna wait. I still like to see nice signal bars, things like that. But we'll wait. Like so that one, that's a little even better. But still, I'm okay just kind of being patient for a little bit. And you can see how the we had a bar that was back to back, or let's just say that this bar, the open and close is inside of this bar, which open and close is inside of that bar. So right there, you're kind of already looking at a like micro congestion zone. You want the price action to just clear up a little bit before you jump in. A lot of the same rules still apply. We're just looking for the trades in slightly different spots. So we push up. Let's see if we get that breakout pullback above this area. So far, we don't. Looking for a swing. Once we get below that swing, so like right there, now that we're below that swing, I would still draw my line through there. And we're probably going to look for some shorts. Um, that's the lower high, but the signal isn't that great. But if you look carefully, that's like an engulfing bar. So again, like that's another thing why I like this system a little bit, because it's a little more obvious to know where price is going. Once you start seeing this bear trend, your first guess is price is going to come test this support area. Your next guess is price is going to come test this support area, right? Only because that's where the previous, I went a little too far back. That's where the previous pivots were. It's very simple and it takes a lot of the thinking out, but you still have to be on top of your game when it comes to risk management, um, and the things like that. But in terms of selecting the trade, you can kind of get away with sketchier trades, in my opinion, or let's say more aggressive trades. But generally, I want second entries though. So we push right through that support zone, don't even bounce, nothing. Another thing that I'm doing is, so like I'd measure leg one, and I bring that over to the pivot. That's leg two. Once we close below this measured move, let's start to expand this concept. And maybe there's like a channel. And since I can't find a clean low, let's just make that the midline. Push higher. So right here we get the failed second entry short. This is where you have to really kind of, it's a little, and that's what I'm saying. That's why I wasn't just jumping into new videos yet, because like for me right now, this is a trade I would skip, right? It's into the support. Even though it's a failed second entry off the EMA, we already made that measured move. I would really prefer to see a second entry short on this side of that support. So I'd probably skip this. If you want to be super aggressive, maybe you take it. But I'm okay at just kind of waiting it out. So we pushed lower, and that one would have worked. I feel like if you're going to be aggressive with this style, the way to be aggressive is when you do have your trends set up. If you get a trade that sets up off your trend line, that's probably an okay place to be quote unquote aggressive, where maybe you're trading into a support or into a resistance. But what you don't want to do too much is just have these floating entries. There's no trend line, there's no support, and you just take the entry there. That's not really going to be too profitable. So we're just kind of pushing down. Not really, no new positions in through there. To be honest, our count off the highs is done, and we're going to need some sort of pullback to get a count off the lows. So I'm just waiting, being patient. Get to that EMA, and we push right through again. We do have a new count off the highs. Maybe that'll mean something for us, but not yet. There's the lower high, but that's kind of what I'm talking about with these lower highs. You don't want to take this lower high. This lower high is just in the middle of no man's land. It's not off our trend line. It's not off the EMA. It's not off a key support. That's not really the lower high you would want. There's a potential for a failed second entry short. In this downward market, you might be aggressive and take it, but the other thing that I'm looking at right now is we have a couple bars that open and close inside of each other. So I'm just going to take it easy. And so like this push right here, depends on your targets. You know, if you're going for 1 point, maybe you get out. I like to go for 1 to 1. I don't know if that's enough. Yeah, so you're a few ticks short before you get stopped out. So, you know, that's not the trade generally that we're looking for. But the trade will come, you know, and another thing to realize about this is you only need but one good trade a day, you know, maybe two, but you only need one. Let me go ahead and turn that off. That's my good friend getting surgery. So we push above this level, but look where we bounce, and that's really crucial, right? We were in this sort of downtrend, and we bounced exactly where that line was, you know. So that's always a great sign. And you'll notice that the market really will respond to these horizontal support and resistance lines. So now that we're pushing a little higher, let's see if we can find some trades if this zone becomes the new accumulation zone. So what I'm going to do here is I'm just going to mark this since we crossed the EMA and crossed previous pivots. The thing here is on this micro range, I still want to see that breakout pullback. You know, in theory, until we get this breakout pullback above this micro range, once we get that bear signal bar, we're probably going to come test the breakout area. But this line, just to kind of keep me, you know, in the right mindset, especially since we made a new high in relationship to these, in relationship to this range. So look, once we got those sellers, we went right back into the range. Nothing too surprising about that. Right there, we get that first entry. You know, signal bar is terrible. There's no trade right there. Still not a trade. This is all part of the first entry. We get another push down. So now I'm starting to get interested. Maybe we're going to get a long trade here soon. So like right here, if we break above this area, I might be interested in taking a long. I think a few things to be aware of, though, is that overall we're kind of in a downtrend. We did kind of break the pattern here, so that's good. It's a second entry. If we're playing the range, we're kind of looking at this as a potential false breakout. And we have a pretty good distance to the EMA. So with all those things considered, that'd probably be where I want to take a trade. And I'd just start off going 1 to 1. A little push, boom, look at that. And see, and you can see, that's what I really like about it. Like, You know you're right when you get these really big bars because that means a lot of other traders took this trade. That means potentially a big market participant took this trade. And that's exactly what you want to see. Something to note as well about a day like today, I'm on the 2000 tick chart. Um, the ATR is a little large. We're having 11 tick stops. Usually we want to have an 8 tick stop. So if the risk is too high for you, sometimes I jump to like a 1,000 tick chart. Um, you just the smaller you go, the more on guard for false entries you need to be. You need to really be on your P's and Q's. You'll have less failures on a bigger chart, but obviously your risk will be larger. And then on the smaller chart, you'll have the risk be closer to what you're used to. But there might be some failures. But if you're really reading the price action, you won't really worry about failures too much, to be honest. But that's just something to consider if the risk is too high. So we're working. You can see how we're just consolidating in this area. So, this range, and it's great. We have this range just off of these couple bars, right? And you can see how it's holding pretty well. So you could argue that this is probably a accumulation zone, and we just want to see what we get off of that. Didn't shoot off or nothing. Didn't get any big runners off that. But hey, if you can just get a couple scalps, you're doing pretty good. Um, we get a double bottom. It's really just the first entry to this high. You might play this as a false breakout, but it wasn't a second entry. It really wasn't even a higher low because on this bar right here, we didn't break above. So this is all just the first entry, failed breakout. I would probably just be waiting. The push lower. Right there, we get the lower high. That's an engulfing bar. I kind of like that trade given the context. It's also a second entry long, right, to this high. The problem with this trade is really just the signal bar. If you really are going to take this trade, yeah, you need like a 22 tick stop. For me, that's probably too much. I'd probably just skip the trade based solely off the signal bar. But if maybe you're trading multiple contracts, a way to get in is to, let's say you're trading 2 or 3 contracts, you would bump down to like one, and then you could take this trade for generally the same risk as you would with 3 or 2 like for instance, if I took 2 contracts on this trade, that's 22 ticks. So it's essentially the same size if you just bump down, and then you could probably take that trade. But generally, I'm not in a rush for any of these trades. I might skip that, but I do like this. Second entry long, higher low, off the key support. We don't have a lot of room to the high, so that's going to be a little concerning. Maybe you go for like half R, maybe you go for just a point, but I don't know. Risking 22 ticks for 1 point, that's never been my game. Gets kind of spooky there for a second, and then it pushes higher, and you get through. Even here, I don't know if that's a failed second entry. I feel like because this bar isn't an inside bar, so technically this is a failed second entry right there. Um, I'd probably skip it because we're just so sideways. That's probably not gonna be the move. But if you're seeing this stuff, and again, look how we're holding at this key support, you might consider that. I'd probably just wait, skip all that. And here, and that's why it's like it gets a little muddy. Once it starts to get muddy, I just kind of stay out of the trades and just wait for it to clear up. But this might be the true failed second entry. But like I said, it's getting a little muddy. It's hard to tell what is actually what. So I'll just wait. It'll clear up, and then I can take the trade I'm supposed to take. Doesn't even really go far enough to make it worth your time. Right there, we get that kind of push higher. Now we're moving back down. Got the lower high, close past the pivot, close past the EMA. We can draw a line, just kind of see how that plays out. Um, there's a second entry line. This is exactly what I mean by sometimes you ignore the signal bar, right? Because yeah, we're trending lower, and that's probably why I would skip this one in particular, is because we're right into that micro trend. Generally, I don't want to do that. But here's a second entry long, right off the key support. I like the trade a lot more once this bar closes. Maybe you can drop a limit order back above the breakout. But once this bar closes, that's pretty much a good sign. Second entry long, key entry point. Sometimes you really just ignore the signal bar. Just take the second entries at the key entry points. Usually you're fine. The reason why I'll skip this one though is we're against that micro trend. I would prefer for us to have already broken out, maybe made a new low, and then kind of gotten this sort of trade. Um, but I'm pretty sure that one works. You know, um, it's all good. Uh, right now, we're just kind of in the middle of no man's land. I'd be just waiting for us to get to one side or another. If you would have took that failed second entry, uh, yeah, it ends up failing. So we're in no man's land. I would just take it easy, wait. Here's a second entry, but again, we're not really off our key support. I would just wait. It's okay. I think it would have worked though. Looks like you get just enough. Yeah, you would have got it, but I mean, the reason you don't take this trade is kind of the same reason you wouldn't have taken this trade. So I don't know if you can honestly say, "Oh, I want to take this trade," without saying, "Hey, I don't want to take this trade." What really is the difference? Maybe there's a little bit of a like more of a failed break lower, but I think the reason you didn't lose on this is the reason you probably didn't take this. So I'm not gonna really count that one. Here's a second entry short. We get this double top. We are going so sideways though that I'm not 100% sure on this. But it's like these are kind of the trades we're looking for. Once we get these double tops, I'm kind of interested in, there's probably some support or resistance. There's probably resistance through there. And even what's the line I just added? Yeah, see, I just added this line. If we look back, that was resistance back in over here. So I kind of like that one. Um, let's see if it. Yeah, see, that's exactly what we're looking for. That's exactly what we're looking for. I got to mark this one after the fact. I think just it was so sideways. It's a little bit choppy today. And sometimes it's like that, like sometimes the market, like this market right here, is kind of choppy. So the fact that you can even find a couple profitable trades in here is pretty amazing. Um, but the key, in my experience, is that we're really only looking for second entries. Failed second entries, the win rate isn't as high. Look at that, just straight through. That's exactly what you want to see. So now we're pushing past the previous support. Let's see if we get that breakout pullback. So like right there, pretty much the breakout pullback triggers, right? Once we close below a previous bar after breaking the range, that's the breakout pullback that we're looking for. So I'd probably just draw my line through there and probably there. My computer's starting to like glitch. So that's why it's kind of taking me a while to get my lines into place. So like right here, that's the failed second entry. Kind of a tough trade in my opinion because look how far from the EMA we are. Technically, we have this downtrend. We broke outside. We already got the lows. The only thing that's going for us is that we are in the markdown phase. I'm trying to just show you. Yeah, we are in the markdown phase. So our expectations is we're going to come test this area, but that doesn't mean we're just going to go straight to that area, right? We could go a couple ticks lower, come back to the EMA, and then start to work down. So I say taking this trade is pretty aggressive, but we're in a like tight bear move. So you might just want to take every signal you can. It's very similar to the one we had up here, right? All these little trades in here, these are really just lower highs, and then once you see these stacking bars, that's probably where you would have stopped. Another thing that you might want to consider on that trade is that we might have leg one and then a potential leg two. So that gets us down here again, right before this sort of support zone. So let's see how this one does. I'm not going to mark it beforehand, but this is a failed second entry in the downtrend. We've confirmed that we are indeed pushing lower. Let's see if we actually push low enough. I'm pretty sure that's enough already. If not, it's like a tick short or it just doesn't tick through. Yeah, so even that right there, you get what you were looking for, what you needed. Pretty aggressive, but if you have the appetite for that, you would have been okay. Once again, see how we closed below that measured move? I wouldn't be opposed. And sometimes these don't help you that much, but that's what I've been doing lately is once we get that measured move and kind of close past it, I'm like, okay, there's really a trend through here. And I might probably put it there. I just try to make it fit kind of nice. Look at that. We kind of push through. We start to get some support at a previous support. A little bit of a failed breakout maybe. And look at the stack up. Look how we're going sideways. That's kind of what you want to see. That's telling us that demand is finally building. There's some demand down here. We didn't necessarily get a strong rejection, but this is telling me there's some profit taking. This consolidation is telling me there's some profit taking. The shorts are covering. Right there, you get a failed second entry. We're not really off of our key entry point. And another thing to keep in mind is that you might view this area as a consolidation, right? So this breakout pullback, see how just a tick above, this establishes our quote unquote uptrend. And if you trade that, you're a little bit early. This just, even though it's our failed second entry, it just establishes that, hey, maybe we're going to start looking for longs now. But if you actually trade this long, you're a little early. It and it gets a push, and if you really look at it, break outside, move to a new high, reverse. So it still is in line with the price action. It just didn't push enough if you went 1 to 1. I think if you go for like 4 ticks, you're probably all right. Right? So when you're taking aggressive trades, maybe you just go for 4 ticks. It's personal. Right there, we get a really it's a lower high, but when I draw these lines into a support zone, I don't want to take any shorts, even though it's like a nice looking lower high. I obviously don't want to take any shorts. I just want to see this play out, and then I want to take a long. And then if you're really kind of eyeballing it, you might even say, there's a micro congestion zone right there. So you're selling the breakout into a previous support. That's probably not the trade you want. Here's a second entry long. You're gonna have to buy some of this breakout. That's probably not great. But you're off this key support. I like that. Again, you have this move down, breakout side, move to a new low. I like that. You're into the EMA, and it's not that great. But I'd be interested in buying this right there, second entry long. I don't know if it gets enough. Yeah, it gets enough. So right there. So you can see how this system of trading, it's not that different from Max. In fact, using Max, dang, I keep saying Max. It's price action system, right? Using the quote unquote price action system, um, it helps you filter some of the wrong trades. It really does. But you also end up kind of taking these trades in like unorthodox places, and I think that's really a winning strategy. So like that trade right there, and even this is a nice one because even if you would have waited, because like this is one of those trades, I might have entered the trade before this bar even closed because you see we broke lower. Once I saw that we were coming up, I know, hey, it's probably going to be an engulfing bar second entry at a key entry point. Just go ahead and jump in that. But you can see this is a trade that even if you would have waited for the bar to close, and then you drop your limit order back above the previous bar, you would have got filled multiple times. So there would have been nothing to worry about. Gotta speed this up a little bit. And even if you look, I mean, this little congestion zone we created held true, like it's still in play. So it's really just adding in a new technique to what we've already built in terms of price action system. It's not about just completely throwing away everything we've learned. It's more about finding a new way to identify these entry points. So right there, we get a failed second entry short, right? Off this low, first entry, second entry. Again, it broke above, but it didn't close above. So I don't even want to trade that. Same thing is over here. Once we actually close above, then I'm going to draw my line. Generally, I want to see that all happen outside of my range. I don't want it to even come back into my range at all. I want to see it happen above this range completely. So I'm just going to wait. See, that would have been a failure. Right here, you get another second entry long, right? First entry, the break above here, second entry. It kind of looks like a failed breakout. I'm not completely sure how this trade plays out, but this is other than the signal bar, and even I mean, go back and read the price action manual. Mac talks about buying second entry dojis after breakouts or at the range extreme. So even though the signal bar isn't great, you could still buy above this bar. So I'd be interested in buying above that bar. Look at that. See, that's exactly what I mean. You know you're right when it does that because the big boys were also saying the same thing. I'm having a little bit of a hard time marking them beforehand because, like I said, this is kind of a new way of reading the market. And it is a little bit like, and you're going to be wrong, like it's okay to be wrong. When I'm trading for real, I'm sometimes wrong. It's really not a big deal. But in these reviews, I want to make sure that I explain why I like the trade as much as possible. And hopefully, you hear the same vocabulary every single time it's a winner. And that kind of validates why I said trade here versus not trading over there. And anyone who's watched my videos knows that it's the same vocabulary over and over and over. Um, so that was a pretty decent trade. You get the higher low there, but we're not really looking for higher lows right now. Again, we need a real breakout pullback. Until then, we're expecting just kind of failures, false breaks, all that type of stuff. Even at this point, right, we have kind of like a double top, a triple top. I would probably look at this area and say, there's probably some resistance right there. So that would mean that taking this short, you're not quite off that key entry point. So I think that's a little aggressive. I don't know if you would want to really take that short, but you might. Look at that. See? Because at the end of the day, it's a range. So, and once you start keying in on the ranges, it's a lot easier to trade them because it's like, well, if we turn at the resistance and get a second entry inside of this range, most likely it's going to come test the other side. That's very basic price action. So again, getting a failed breakout. There's a second entry right there, but I probably skip this one just because the signal. It's like your entry would need to either be this outside bar, or you would enter on the break of the inside bar and then have your stop below the low of the outside bar. That's how you have to structure that trade. If you don't just trade the outside bar, it's too messy for me. You have bars inside of a bar inside of a bar. I'd probably just skip that one. Works like butter, but at the same time, it's not quite in the rules, and I don't think realistically I would have traded that one. Now we're getting a breakout again on this high side. The break below here is just a first entry. A higher low. The break below there is a second entry. So like right there, that's a second entry, but here's a key point. I don't want to trade on the other side. I want this second entry to be on the inside of my range. I'm trading into this resistance. That's not what we want. So, you might even, if this fails, you might even take the failure the other way. Yeah. See how just one tick traps and then goes the other way? Like that's really a key thing. You're not just taking the second entry through these lines. You want to see it set up on the right side of your price action. Like even these trades, they were failed breaks and breakouts of this sort of internal range, but in the key levels that I set up in the pre-market, all of these trades are inside of that range. That's a really key distinction. So if you look at that, there was like a failed second entry right there. Again, I'm not really looking for failed second entries. I've had mixed success trading failed second entries. I'd almost rather just trade regular second entries. I think here, though, you might trade it because off this high, we get a first entry. Then when it breaks lower, comes back above, that would be your second entry. So if you trade this, you're going to trade this because of the second entry, not because of the failed second entry short. And look at the movement you get. You get a lot of nice movement. I'll mark it as aggressive. Like I said, I've been working on this strategy for about 3 months. So it isn't that new to me anymore. But still, I think this is the first video, maybe the second video. I might have brought this up a few months ago. But this is the first video where I'm in depth kind of showing how it works. So it is a little bit hard for me to like claim some of these trades because it is a little bit new. It's kind of unorthodox. So let's talk a little bit about market structure. We had the downtrend, an accumulation, and now an uptrend. That's pretty much to the T what we expect from this system. This video is getting kind of long. We're just going to go to 8:30. I don't want to spend too much time. I think by now y'all get the idea. I mean, even the fact that I already have, you know, a solid amount of trades, winners, I'm pretty sure that should speak for itself in terms of the potential when you trade like this. We get that sort of break in pattern, a lower high, a close below the EMA. I'd want to just mark that and just try to stay on the right side. Here's a second entry long, but we're just floating in the middle of nowhere. That's not really the trade I want to take. You're trading into this micro trend. That's not really the trade I want to take. You're pretty far from the EMA. That's cool, but that's not the one that I would take. And I mean, somebody somewhere decided it was a good trade, but with my context and right now the way my chart is set up, that just wasn't my trade. Now that we broke the highs, let's see if we can try to get back on board with the trend. And that's kind of another key point, is that generally, if we're in the markup phase, you don't just go from an uptrend to a downtrend. Generally, you're going to have an uptrend, a distribution phase, and then a downtrend, if you want the downtrend to be healthy. So sometimes when you're trending up and then you just get this drastic move down, it's going to continue in the uptrend. There's your higher low, but look how far from the EMA we are. We're not really trading the support. We're trading in between the support. And then you can see that we have a bar inside of a bar inside of a bar. I'd be looking at it kind of like this. So you're trading the breakout. I would just wait on that. Do we get trapped? Right here is a second entry long, but again, you're trading into this resistance. Just not my trade. We're not really off the EMA either. That's not going to be my trade. Here we get the kind of like a failed second entry. It's a little bit better. You're a little bit more supported by that previous resistance. You're still trading the breakout of this, but this is more of a minor congestion zone. I'm willing to trade the breakout of this zone. If you're seeing this, I think this is aggressive, but you might trade that long. That's pretty good. I'm pretty sure that's enough. That should be at least 1-to-1. Yeah, and that's just kind of aggressive. You're a little early, but you'd rather trade the breakout of this area as opposed to trading into that resistance, the golden resistance area. And that pretty much gets us to 8:30, about a minute. First entry, I'm cool. That's about 8:30. The second entry, nah, it's just a higher low. But that's pretty much it. So y'all can see kind of how it works. Again, you probably only need like 2 of these trades, and you had a pretty decent day. A little bit slow at the beginning of the day, but once we get our first little distribution zone / accumulation zone, that's you can really start to get cooking. We'll kind of scroll through. I'm not really going to call out trades, but we can kind of see how the rest of the day plays out. I think what's interesting to look for is, let's see if we get like a distribution zone up here and then a downtrend, right? So you can see distribution, right? We can see we're trending up. We get that push lower, and then we get the push higher. I kind of see my first double top kind of around here, to be honest. And there's another one over here. Just depends on how you want to play it. I don't mind seeing a couple failed breakouts. That to me is all part of structure. So I probably would have been playing it like that. Get some distribution, and then we continue the uptrend, right? We get the breakout pullback up here, and we continue in the uptrend. All right, let's see if we get another distribution zone. Not really, we're just getting higher lows. Just easy uptrend, just pretty much buying. I don't see, like I see a second entry right there. Probably kind of zoomed out, right? Off this high, first entry, second entry, things like that. And when you're trending like this, I would still use your horizontal support and resistance, but I'd also just use your trend lines because now you're actually trending. It'd be a lot easier to find your trades with the trend line than it will the horizontal support and resistance. But once you notice a distribution zone, then I'd start to get your horizontal support and resistance going. But yeah, that's pretty much what I saw today. Um, like I said, I only want to make videos when I have like new things to say, or there's a market that I feel is different, so that we can talk about something new. Otherwise, everything is in the previous videos. But hopefully, it's been a little bit, so y'all got something different out of this video, and we'll be back to do it again. Maybe it might be at the end of this month, since it is October 1st. It might be at the end of this month or the beginning of next month. I'm not sure. Maybe we'll do 2 this month. But until then, it's your boy Kamal Hart signing out. I'll see y'all later.